All right. Hello, everybody, and welcome to Zoom's Q2 FY25 earnings webinar. As a reminder, today's webinar is being recorded. And now I would love to hand things over to Charles Evslag, Head of Investor Relations. Charles.
Thank you, David. Hello, everyone, and welcome to Zoom's earnings video webinar for the second quarter of fiscal year 2025. I'm joined today by Zoom's founder and CEO, Eric Yuan, and Zoom's CFO, Kelly Steckelberg. Our earnings press release was issued today after the market closed and may be downloaded from the investor relations page at investors.zoom.us. Also, on this page, you'll be able to find a copy of today's prepared remarks and a slide deck with financial highlights that, along with our earnings release, include a reconciliation of GAAP to non-GAAP financial results. During this call, we will make forward-looking statements, including statements regarding our financial outlook for the third quarter and full fiscal year 2025, our expectations regarding financial and business trends, impacts from the macroeconomic environment, our market position, opportunities, go-to-market initiatives, growth strategy and business aspirations, and the product initiatives and expected benefits of such initiatives. These statements are only predictions that are based on what we believe today, and actual results may differ materially. These forward-looking statements are subject to risks and other factors that could affect our performance and financial results, which we discuss in detail in our filings with the SEC, including our annual report on Form 10-K and quarterly reports on Form 10-Q. Zoom assumes no obligation to update any forward-looking statements we may make on today's webinar. And with that, let me turn the discussion over to Eric.
Hey, thank you, Charles. Thank you, everyone, for joining us today. We had a strong quarter marked by broadening our Zoom Workplace offering, marching up market with contact center, and deepening the AI capabilities that underpin our entire platform. The rollout of Zoom Workplace features over the last few months represent the most significant upgrade to the Zoom experience in years. We reinvigorated the UI with the simplicity and reliability that has defined Zoom from the very beginning, while also adding to the capabilities of Zoom Meetings, Zoom Team Chat, and Zoom Phone, and strengthening how AI Companion operates across these modalities. We also brought Zoom Rooms, visitor management, and workplace reservation to the next level in order to better support our customers' flexible work needs. And just days ago, we announced the launch of a new Zoom webinar offering that can host up to 1 million attendees, revolutionizing the way organizations can connect with massive audiences and demonstrating the clear scalability advantage inherent in our modern architecture. Earlier this month, we took another major step towards our platform vision by launching Zoom Docs. Docs fits right into our strategy of expanding the platform across more touch points in the productivity lifecycle, helping to effortlessly transform information from Zoom meetings into actionable documents, tasks, and knowledge bases so team can stay focused on meaningful work. In Q2, we landed our largest deal for a new contact center customer who chose our top-tier Elite CX package coupled with Zoom Phone. We are seeing increased adoption of our advanced contact center packages as customers seek to utilize our AI capabilities to enhance agent performance. Of our top 10 contact center wins, all represented displacements of major contact center vendors, and 40% were migrations of our first-generation cloud-based solutions. These metrics highlight how well our contact center meets the needs of customers and prospects, while also validating our better together strategy. In fact, most contact center wins represent either existing Zoom Workplace customers who add on contact center, or new customers to Zoom who buy contact center in conjunction with Zoom Workplace. This demonstrates the desire for seamlessly integrated customer and employee experience solutions, which Zoom excels at delivering. The seamless integration of the customer and employee experience rests upon Zoom's AI companion technology as a fabric to unify the whole platform. Today, AI companion enhances an employee's capabilities using generative AI to boost productivity through features like meeting summary, chat compose, image generation, live translation, and enhanced features in contact center. As these features have grown in popularity, we are very happy to share that Zoom AI Companion is now enabled on over 1.2 million accounts. But we have only scratched the surface. Our progress broadening Zoom Workplace, building out enhanced AI tools for contact center, and amassing a large base of AI users sets us up well to transition into the 2.0 phase of AI-enabled work. In this phase, Zoom AI Companion will move beyond enhancing skills to simplifying your workday, providing contextual insights, and performing tasks on your behalf. It will do this by operating across our collaboration platform to ensure your day is interconnected and productive. We'll have more to share about our AI strategy at Zoomtopia in October. We hope you all can join us. Now, let me recognize some of our amazing customers. First, let me thank TIAA, a leading provider of secure retirement and outcome-focused investment solutions, for strengthening their partnership with Zoom. A longtime customer, TIAA, upgraded to Zoom Workplace Enterprise Plus and added Zoom Contact Center and quality management in Q2 in order to further enhance the employee and customer experience. I would also like to thank Prime Inc., one of the largest trucking and freight delivering companies in North America. Prime came to us through the channel and chose to further elevate the experience they provide their drivers with Zoom Contact Center and quality management. But the value did not stop there. Recognizing the power of our natively integrated employee and customer experience platform, they added Zoom Workplace as well as webinar and rooms to support the collaboration and flexible work needs of their corporate offices. In addition, I'd like to thank Lyra Health, a leader in workforce mental health benefits, for integrating Zoom's video SDK toolkit into their platform. Lyra has successfully migrated to Zoom, bringing our cutting-edge video technology directly into their applications, exemplifying our developer-focused approach. Finally, WorkVivo had an amazing quarter, with wins including a leading Southeast Asian bank and a famed European automotive brand. WorkVivo's success was extended by the Meta partnership, which contributed some exciting new logos in Q2, including a major North American telco. We are so happy to provide these companies with an employee experience platform that elevates the way they inform, connect, and engage employees and integrate seamlessly with a broad Zoom portfolio. I'd like to take this opportunity to share the news that after almost 7 years, Kelly has made the decision to leave Zoom. Kelly joined Zoom about 2 years before our successful IPO in April 2019, and her role in that has been a highlight of her time here. She will leverage her skills in helping companies scale and building successful businesses to help another startup in that process for the next Zoom. She has been an integral part of the Zoom journey, steering our IPO in 2019 and continuing the momentum as our customer base rapidly expanded during the pandemic. Under her strong financial leadership, Zoom has maintained a consistent track record of profitability and cash flow growth. We are conducting a comprehensive search for our next CFO with the assistance of a leading executive search firm. Kelly will be staying on through Q3 earnings, and given that we have a very robust financial organization through her commitment to talent development, I'm very confident that there will be a seamless transition. We wish Kelly all the best. Now, I'll pass it over to pass it off to Kelly.
Thank you, Eric. First, I'd like to thank you, of course, and the entire Zoom team for an incredible experience over the past 7 years. Zoom has not only made work more productive, but we have transformed the everyday lives of people globally. As Eric mentioned, I am committed to staying through the Q3 earnings. So this is not goodbye. We'll get to see each other again, and I will help with the seamless transition. Now, back to earnings. We are pleased that we beat our top line and profitability guidance in Q2. Here are a few achievements from the quarter. First, Zoom AI Companion reached approximately 1.2 million accounts enabled as of the end of Q2. Second, we saw amazing traction with WorkVivo as we reached 69 customers with over $100,000 in ARR, roughly doubling year over year. And finally, we surpassed 1,100 Zoom contact center customers, representing more than 100% year-over-year growth. Now let's dive into the financial results. In Q2, total revenue came in at $1.163 billion, up 2% year-over-year. This result was approximately $13 million above the high end of our guidance. Our enterprise revenue grew 4% year over year and represented 59% of total revenue, up from 58% a year ago. Online average monthly churn came in at 2.9%, down from 3.2% in Q2 of FY24. This is the lowest rate that we have ever reported. We saw 7% year-over-year growth in the upmarket as we ended the quarter with 3,933 customers contributing more than $100,000 in trailing 12 months revenue. These customers represented 31% of revenue, up from 29% in Q2 of FY24. Our trailing 12-month net dollar expansion rate for enterprise customers in Q2 came in at 98%. The number of enterprise customers at the end of Q2 was approximately 191,600. Please note, this metric has diminished in value over time as we focus on upselling existing customers and landing larger prospects with Zoom Phone, Zoom Contact Center, and other new products. Our Americas revenue grew 3% year over year, while EMEA was flat and APAC declined by 2%. On a constant currency basis, APAC grew 1% and EMEA declined 1% year over year. Moving to our non-GAAP results, which exclude stock-based compensation expense and associated payroll taxes, acquisition-related expenses, net gains on strategic investments, net litigation settlements, and all associated tax effects. Non-GAAP gross margin in Q2 was 78.6%, as compared to 80.3% in Q2 of last year, mainly due to investments in AI as well as upgrades to our data center backbone. For the full year of FY25, we continue to expect our gross margin will be approximately 79% before improving towards our long-term target of 80%. Non-GAAP income from operations came in at $456 million, exceeding the high end of our guidance of $420 million. This translates to a 39.2% non-GAAP operating margin for Q2, as compared to 40.5% in Q2 of last year. Non-GAAP diluted net income per share in Q2 was $1.39 on approximately 314 million non-GAAP diluted weighted average shares outstanding. This result was 18 cents above the high end of our guidance and 5 cents higher than Q2 of last year. Turning to the balance sheet, deferred revenue at the end of the period grew 3% year over year to $1.41 billion. The growth was roughly 2 percentage points higher than the growth rate provided last quarter, partially due to the continued refinement of discounting practices as well as lengthening billing terms. For Q3, we expect deferred revenue to be up approximately 5% year over year. Looking at both our billed and unbilled contracts, our RPO increased 8% year over year to approximately $3.78 billion. We expect to recognize approximately 60% of the total RPO as revenue over the next 12 months, up from 59% in Q2 of last year. Operating cash flow in the quarter grew 34% year over year to $449 million. Free cash flow grew 26% year over year to $365 million. Our operating cash flow and free cash flow margins expanded to 38.7% and 31.4% respectively. The year-over-year improvement in our cash flow metrics is due to higher collections from increased billings, higher interest income, and a prior year legal settlement. We ended the quarter with approximately $7.5 billion in cash, cash equivalents, and marketable securities, excluding restricted cash. Under the $1.5 billion share buyback plan in Q2, we purchased 4.8 million shares for $288 million. This was up from 2.4 million shares for $150 million in Q1. Turning to guidance. For Q3, we expect revenue to be in the range of $1.16 to $1.165 billion, which at the midpoint represents approximately 2.3% year-over-year growth. We expect non-GAAP operating income to be in the range of $438 to $443 million. Our outlook for non-GAAP earnings per share is $1.29 to $1.31 based on approximately 314 million shares outstanding. We are pleased to raise our top line and profitability outlook for the full year of FY25. We now expect revenue to be in the range of $4.63 to $4.64 billion, which at the midpoint represents approximately 2.4% year-over-year growth. We expect our non-GAAP operating income to be in the range of $1.79 to $1.8 billion, representing an operating margin of 38.7% at the midpoint. Our outlook for non-GAAP earnings per share for FY25 is $5.29 to $5.32 based on approximately 316 million shares outstanding. With the strength in free cash flow in the first half and increased outlook for operating income in FY25, we now expect free cash flow to be in the range of $1.58 to $1.62 billion for the full year. Thank you to the entire Zoom team, our customers, our community, and our investors for your ongoing trust and support. David, please queue up our first question.
Thank you, Kelly. We will now move into the Q&A session. When I call your name, please turn on your video and unmute. As a reminder, in an effort to hear from everyone, please limit yourself to one question. And our first question will come from Meta Marshall with Morgan Stanley. Meta?
Great. Thanks so much. Maybe just a quick question for Eric. Just where are you seeing kind of the most interest in the AI companion products or kind of the most usage? And just how does it inform how you're kind of looking to invest going forward? Thank you.
Yeah, great question. I think, first of all, I want to share with you, and our customers really like a Zoom AI Companion. First of all, it works so well. Secondly, at no additional cost. Not like some of our other, vendors, they got to charge a customer a lot. And in our case, this is part of our package. So in terms of the feature set, and we introduced the AI Companion, a while back, right? So I think you look at almost every product in the Zoom meetings, phone, team chat, or whiteboard, everywhere, right? So empowered by AI Companion. Look at each product. Take a meeting, for example, right? For sure, the number one use case is like a meeting summary, right? And we keep improving that quality, like in the action item and meeting summary, are getting better and better. Like in July, we had another upgrade, the quality-wise, even better than previous deliveries, right? And we also leverage our AI companion, right, to empower our business services. Take a contact center, for example. I just gave you a few features we delivered in Q2. Like we leverage AI, to focus on expert assist. A few features, like automatically and the engagement disposition, and automatically wrap up notes, and also for your next action as well. All those AI features are empowering our business services. I just use the contact center as one example, right? So we look at every service, every features, think about how to leverage the AI companion to improve our product experience. That's why we're very excited, and a lot of new features, and also will be available in next few months and quarters. And also in October we have Zoomtopia. We are going to announce a bunch of AI companion enhancements.
Great, thanks. Looking forward to it.
Thank you.
Okay, our next question comes from Arun Bhatia with William Blair.
Hi, this is Chris on for Arjun, and thanks for taking my question. Real quick, in a similar vein, I wanted to get a better understanding of what's helping drive some of the strong adoption you've seen recently in WorkVivo. Where are customers seeing the most value with that? Thank you.
So in terms of WorkVivo, I think first of all, it's really helped employee engagement. In particular, given the flexible work, how to seamlessly, engage your employees no matter where they are. This is very important, right? You cannot leverage meetings or phone or chat to do that. You have to have a new service. That's the reason why we acquired WorkVivo and before, right? And that solution works very well. A lot of companies, especially for very large enterprise customers, realize the value, right? And the experience works so well, very straightforward UI, and not to mention, recently Meta, right? They decided to retire their, the platform, and Zoom is the only platform they supported for migration, and further helped us, right? Essentially, when customers look at Zoom platform, on the one hand, communication, on the other hand, collaboration. At the same time, engagement is becoming more and more important. That's the reason why WorkVivo is playing such a big role. So we closed a lot of new logos in Q2 and quite a few very large deals also in the pipeline as well. So we're very excited about the WorkVivo platform. By the way, internally, we're also using WorkVivo for any announcement, any news, employees just go to the WorkVivo interface rather than go to the emails or chat messages. Is really not scalable, not friendly either.
Okay, our next question comes from William Power with Baird. William?
Okay, great, thanks. And Kelly, thanks for all the great help here over the years. Sounds like we'll still have you for a little while though, which is great. I wanted to start, I guess, on or macro, right? I mean, that's still kind of center stage. There have been kind of renewed concerns over the health of the consumer, and so I guess I wondered, within the online segment, if you could comment on expectations there and kind of what you're seeing real time in the market. I mean, the churn rate suggests that things are going relatively well there, or at least okay. But kind of what's baked in from a consumer macro standpoint, and then the other side of that is just be great to kind of hear what you're seeing on the enterprise, in terms of sales cycles, downsells on the video front, et cetera. Thanks.
Eric, do you want to say anything generally first? You want me to dive in?
Just go ahead. Yeah, thank you.
Yeah. So in terms of enterprise, we continue to see growth there, and you can see that reflected in our guidance for the year. We've had a lot of stability in terms of our retention rates, and this is going to show up eventually in our net dollar expansion that we expect to start to reaccelerate as we come to like the middle of next year. And when you have a chance to really look at the guidance, right, you'll see that we are forecasting, as we said, that Q2 would be the low point this year in terms of year-over-year growth, and we would start to reaccelerate in Q3. And that's what's reflected in our guidance, which we're all very excited about. In terms of online, as you noted, we see ongoing improvement in our retention rates there, which I think is reflected about all the great progress we're making in the platform, including all of the Zoom AI companion features that Eric just talked about, which are included for our online customers as well that are paying. And so that's been really great to see. I would say the one area that we've seen some headwinds, which is consistent with peers, is in SMB and like the small customers. We've certainly seen some overall concern about the economy there. But it's, I think, pretty close to being in line with what we were originally forecasting for the full year. So we're just keeping a very close watch on that.
Okay, thank you.
Yep.
Okay, thank you. Our next question comes from Siti Panigrahi with Mizuho. Siti?
Hi, can you hear me?
Yep.
Yeah, hi, CT.
Okay. Great. Thanks for taking my question. And Kelly, it's great working with you. So my question about contact center, it's good to see some traction in the contact center side, but we're hearing from your peers about the macro pressure they are seeing in this market. So how do you see this Zoom contact center, features and capabilities compared to your competitors? Like, what's helping you win against them? And then the question, like, when should we expect contact center to be a material revenue contributor?
Yeah, I can start with Kelly. Feel free to chime in. I think that's first of all, you look at the key wins in Q2, right? And we closed the single largest deal in Q2, right? Look at it over the past few quarters, right? So we're making very good progress. Look at the large deals, like in Q1, if I recall correctly, we closed around 90. Then Q2 closed like 117 and the large deals, right? And the reason why customer they truly trust Zoom, because some customer they already are our customer for a long time, and they know we want to innovate together with our customers, like our innovation speed. They like all those features. In particular, some of the features, AI features, we deliver much faster than any of our competitors. And also, it's not only just the core contact center offering, but also we also came up with our own workforce management, quality management, and not like some other vendors. They had to, resell other solutions in the integration, not as seamless, right? From a customer perspective, realize we're very, very serious about the contact center, and the feature set is great, and also the integration with our, other, the UC platform also is very seamless. Plus, and the feedback, especially for a customer, they did a POC after they test Zoom Contact Center, realize, wow, it works so well and it's so powerful, and that's the reason why we're gaining momentum. And I think in terms of feature set, we can, we have high confidence. We do not lose the customers because of feature set. So,
and remember, even now with our new pricing tiers that we've added in, we are still very, very price competitive against everyone else in the market. So from a total cost of ownership perspective, when you look at it, combined with this the most modern architecture out there, I think it's a very, very compelling reason for our customers to switch.
Yeah. And also another thing is, every time we made a commitment, we did deliver. That's another way to build a trust. When like a federal rep in Q2, and and the PCI compliance and so on and so forth, right? We did deliver. So.
Okay,
Great,
thank you, CT.
Thanks, CT.
Our next question comes from Ryan McWilliams with Barclays. Ryan?
Hey, thanks for taking the question. So now that you're seeing more adoption, Kelly, of Zoom Companion, how do you think about the costs of providing these generative AI features and capabilities? And do you think Zoom could eventually charge on a usage basis for power users of these generative AI capabilities, just trying to weigh cost versus revenue opportunities here? Thank you.
So that's a great question. And our philosophy is we always look at everything from a customer's perspective, right? Especially for given the macroeconomic environment, right? So every company tried to save the money, consolidate the cost, and so on and so forth. I do not think we should charge a customer for AI Companion. I mean, when we launched AI Companion, right? So we already announced, we do not want to charge a customer. However, that's for the workplace. For the business services like a contact center, all those new offering, and I think for sure we are going to monetize. As I mentioned in the previous earning calls, but new solutions or the business services, AIC, I think we are going to charge AI Companion, right? For the workplace, and our core UC offering and collaboration offering, we do not want to charge. I want to see, really appreciate our AI team's great effort, right? And focus on the quality, focus on the cost reduction, and so on and so forth. I think that's the reason why some customers look at our offering. You look at the total cost of ownership in terms of support cost, AI cost, and also in the product experience. Customer realize, wow, it's better double down on Zoom, deployment. And it's that's the reason why we are going to continue winning. So.
And then Kelly, maybe just on gross margins, like the impact of generative AI and maybe what you can do to alleviate some of that stuff there.
Yeah, I mean, we're guiding to 79% for this year, which we feel reflects the prioritization of AI, but also the very strong discipline that we continue to apply. And we are holding to our long-term target for gross margins of 80%. But of course, we think at this point in time, it's very important to prioritize these investments as they really, set us up for future growth.
Yeah.
I definitely think it makes sense to focus on adoption first. Excellent. Thanks, guys.
Yeah, just one more thing. I also want to give a credit to our DevOps team. On the one hand, for sure, we are going to buy more and more GPUs, right? And also leverage that.
Yeah.
However, our team tried to save the money from other areas, fully automated and so on and so forth, right? So that's another way for us to save the cost, right? To, make some room for AI. So.
Appreciate it. Thank you.
Thank you.
Thanks, Ryan.
Okay, our next question comes from Tyler Radke with Citi. Tyler?
Tyler, are you there?
Yes. Can you hear me okay?
Yeah.
Hi, Tyler. Yeah.
Hey, good to see you. Thanks for taking the question. Kelly, I'm wondering if you could it was great to see the stabilization, or actually the record high in terms of the online renewal rate. I'm curious if you could speak to the new business side of the equation. And I know Wendy and team have been doing some initiatives to drive improvements there, but how do you sort of see the new business side of the equation relative to how you were thinking about it, a couple quarters ago?
Yeah, so Wendy and her team continue to do a great job of adding features, looking for additional offerings to continue to expand our growth there. I think in terms of our quarter, we certainly saw growth and are very pleased to be able to raise our guidance across the board. The one area that we have seen some headwinds, which I think is very consistent with what you're hearing from peers, is in the SMB and the really small business area, because everybody is concerned about the future of the economy and being very thoughtful about buying decisions. With that said, it's roughly in line with where we were expecting coming into the year, which is why you've seen us continue to execute against our guidance and be able to raise going forwards.
Thank you, Kelly, and best of luck.
Thank you.
Okay, our next question comes from Parker Lane with Stifel. Parker?
Yeah, guys. Hi, this is Jack on for Parker. Congrats on the nice quarter. Wanted to touch on that large win in the contact center. What kind of initiatives was this customer looking to accomplish, and why did they ultimately choose Zoom? Thanks.
But I think for sure this customer, they evaluated multiple contact center offerings in the market, and they really want to understand the roadmap and architecture, especially your AI initiative, right? And so given the POC, right, they evaluated multiple solutions, and Zoom excels. And when it comes to comparing against the other vendors, feature side, AI, and the price, and the brand recognition, and also again they really trust our team. They know we always innovate together with the customers, and this happened before, like the Zoom Phone as well. And ultimately, it boils down to the trust. They know actually we can innovate. We innovate faster. We can innovate together. And given all the features we promised like before, we did deliver. And it's really like the Zoom Contact Center. It's not like other legacy solutions, right? It's very slow to move, very slow to embrace AI. We built a new solution with a modern architecture. It's a much better experience. So, and why not? So, and pick up Zoom. So, yeah.
Okay, thank you. Our next question comes from Michael Funk with Bank of America. Michael?
Hi, good evening. Yeah, thank you for the questions. And Kelly, thank you again for all the help over the years. I know I'll see you next quarter as well. Another question on contact center, if I can, just clarification. the recent wins, are they more skewed towards internal or external contact center? So meaning employees versus customers.
For external, primarily external, right? They use that, to engage with their customers and their partners, right? When we launched, many quarters ago, right, some of the customer use our contact center for internal, IT help desk, but now, majority just for the external facing and for support team, customer engagement team. So
that's very helpful. Thank you, Eric. And then Kelly, I think you mentioned earlier this year when I met with you that you expected contact center growth to ramp similar to phone growth, that was a good precedent for growth expectation. Are you growing above those expectations for contact center or in line?
We're in line with that. So it hasn't changed dramatically. I mean, we're very pleased with how both phone and contact center are continuing to drive growth, but it's more in line with what we had expected.
Great. Thank you both.
Yeah, thank you.
Thank you. Our next question comes from Mark Murphy with JP Morgan.
Hey, thanks for taking my question. Already on here for Mark Murphy, and Kelly, thanks for all the help you've provided us. One question I had is when you're looking at Zoom AI Companion, we've heard a lot of great things in the field from customers kind of comparing it to other products that are offered out there. Can you kind of remind us about how you guys think about tracking success with the product internally, given that you don't kind of charge for it directly? Beyond having millions of people using it, is there any way you kind of track it, whether it's utilization, improvement, and retention, anything along those lines?
Yeah, I mean, what the metric that we've been talking about on here is account activation. So looking at how many, it's not individual users, it's actual customer accounts that have activated it. And you can imagine for larger enterprises, there's usually an approval process that they go through, but we watch that. And then internally, we're watching things like the number of meeting summaries produced. So some of the other like usage metrics is how we're evaluating usage and success.
And also very often we never have EBCs with our customers, and also they share the stories, right? How Zoom AI Companion, like those very accurate summary action items are helping their the employees' productivity as well. And yeah, so a lot of very positive feedback about adopting Zoom AI Companion.
That's great to hear. Thank you.
Thank you.
Okay, our next question comes from James Fish with Piper Sandler. James?
Hey guys, Kelly, it's been great working with you. And my question is more directed at you. You had mentioned here, we're talking about 98% trailing 12-month retention rate, and it sounds as if we're starting to see the bottom of that. In fact, our math would imply you're actually above 100% today on the end period. So can you break down what you're getting across expansion mix between upsell of seats, if you are starting to see upsell of seats again, across meetings or other products, any pricing changes, adoption of other products like phone or contact center at this point in terms of how it's impacting that expansion? And I get, rounding is involved, but should we not be interpreting that up market is accelerating at this point, but similar to what we saw from a dollar perspective? Because if you run the math there, it would suggest like 9% potentially if you just use the absolute number.
Yeah. So when you think about the way that we're thinking about looking forward, certainly the growth for the back half of this year and into next year is being driven by the upmarket, very specifically our direct segment, but even within that segment, the upmarket portion of it. If you look at the growth rate of our metrics with customers with greater than 100K trailing 12 months, in fact, you see that's growing at 7% year over year, which is higher than our overall revenue growth rate, which is a good indicator of that. And so what we see is similar to when we do the in-quarter calculation. We've started to see stabilization in our net dollar expansion, and we know that runs ahead of our external reported metric. And that's why I said kind of middle of next year, we expect that to start reaccelerating again. And that's being driven by the ongoing performance of Zoom Phone, Contact Center, obviously Workvivo, is sometimes an add-on, sometimes those are brand new customers that are coming in. And I would say, I don't know that I mentioned earlier, we've seen stabilization in our retention rates in enterprise as well. So that's good in terms of even if seats aren't being added for meetings, that we're starting to see some stabilization there in terms of renewal rates from customers.
Helpful. Thanks again.
Yep.
Okay, our next question comes from Peter Weed with Bernstein. Peter?
Hi, Peter.
Thank you. Oh boy, this is not going to be very pretty if I'm on that thing.
There you go.
There we go. Now you should have me in a normal mode on my camera.
You look great.
Hey, thank you very much. I appreciate it. And Kelly, we will miss you. I mean, you've been very open and honest with us over time, and it's been very helpful. I'd love to follow up that last question on expansion, and I think you'd been talking about getting to stabilization about now, and kind of when we unpack that number, at least in our model, it does look like on a quarter-over-quarter basis, the upmarket definitely saw some strength, whereas the kind of down market was a little bit flatter, which I think historically has always been the case because there's a little bit of cannibalization that comes out of that going into the up market. When you look forward from here, where are you seeing, I guess, those kind of early kind of accelerations going on, and how do you think about those kind of escalating over the coming quarters? Is it the type of thing where we can start to see this building on itself quarter over quarter, or you just said middle of next year, which makes it seem like this is one step up and then you expect it to be flat? How is that kind of shaping up?
Let me clarify a couple of things. So what's going to stabilize and start to grow again in the middle of next year is the net dollar expansion rate, very specifically. That's because we're on this, it's a trailing 12-month metric. What we're seeing in terms of revenue, when you look at the guidance, is Q2 was, as we forecast, the low point in year-over-year growth. And now, given the strong contribution we're seeing from contact center, from phone, from Workvivo, we are guiding to re-accelerating growth starting in Q3. And that, combined with this stabilization in our retention rate in enterprise and ongoing improvement in online, all of that is what's leading to this re-acceleration, the strength that we see in the future.
And when you kind of look at the kind of underlying components then that are kind of driving that strength, I guess it's probably not seats, it's many of these additional, I guess, both products and versions that have been pushed into the market. When you think about the balance between those, getting people to sign up for, one versus, adding a contact center or these types of things, give us some color on the contribution of both of those as this kind of acceleration kind of moves forward.
Yeah, we do see expansion, land and expand being a motion that we see. Of course, historically, it's been the motion we've seen for meetings, but we also see it for phone. We see it for contact center as well, especially as we keep adding more. Eric touched on this, but we've really expanded the features and functionality on contact center that allow it to really serve externally. So things like PCI compliance and FedRAMP and all the social integrations, which are a necessary component for any company to talk to its external customer base. And that's what's really led to some of this acceleration that we're seeing in contact center.
I appreciate the additional detail. Thank you, Kelly.
Yep. Thank you.
Okay, our next question comes from Peter Levine with Evercore. Peter?
Hi, Peter.
Hi, Kelly. Hi, Eric. Thank you for taking my question. Maybe just on capital allocation, Eric or even Kelly, you sit down and think about strategy, and you want to retain your competitive advantage. You have $7.5 billion in cash. We've seen you move into contact center, phone, your productivity apps as well. What's the best way for investors to think about how you plan on deploying that capital? You have the buyback in place. but it's been I don't know, a while since we've seen any larger activity. But maybe help us understand the strategy in terms of what you're thinking in terms of to help re-accelerate top line. If it's new product, is it tech? Just maybe help us understand how you're thinking about that.
Yeah, so from a high level, so we look at everything, from a customer perspective, right? Quite often when we talk about innovating together, right? And sometimes, customer they better need this feature. Take a Workvivo for example, right? Customers say, yeah, I really like employee engagement tools. We know we cannot build that, in a timely manner. We have to go through the M&A. And as we look at our platform play, and also plus AI, plus business services, there's so many opportunities out there. I do not think we can build everything organically, even if we want to, right? It's sort of what a culture before. But now we are more aggressive. We got to, hey, how to quickly and add those new services or features, right, to beef up our existing offering. And that's just kind of one of the top priorities here we're working on. And because especially given the AI era, right? And you have to move faster. I think in my view, it's more like a loss of M&A opportunities down the road. So, and that's kind of our strategy. So.
And then Kelly, if you're willing to share a number with contact center, can you share like a revenue number or at least a target in terms of, because when phone hit 10%, you gave us that milestone. Is there an internal plan on when you think contact center will hit 10%?
When we hit 10%, we of course will start disclosing it. But remember, it was in like Zoom Phone's 5th year of its life, I think, before it hit that metric. And contact center is in its 2nd year of life. So while we're thrilled with its performance, we aren't quite yet. It's going to be a while before it comes to a stage where we would be disclosing the percentage of revenue. That's why, for now we're disclosing customer count and giving you other metrics around like the top 10 being displacements, trying to give you color about what we're seeing in the market, but it'll be a little bit before we get to that metric specifically.
Thank you very much.
Yeah.
Okay, our next question comes from Rich Magnus with Wolfe Research. Rich?
Hey guys, it's Rich on for Alex. Just wanted to come back to the large customer ads for contact center you were highlighting and the top 10 wins being displacements. You said 40% were from legacy migrations. So of the 6 that were not replacing the first gen solutions, what were the biggest drivers of those wins? Was it pricing, AI functionality, or something else that we're missing? Thanks.
So I just want to be super clear about it for a second. So of the top 10 wins, all were displacements. 6 of them were replacing on-prem existing legacy, and 4 were replacing other cloud providers. So I think against all of them, I mean, Eric, you feel free to chime in now, but it's just highlights, the modern architecture with the contact center that's built with AI at its core from the very beginning.
And also, so Rich, believe it or not, actually, quite often customer mention the stability also plays a very important role, because when it comes to contact center, it's very important when customers engage with their customers, you have to be very stable, right? And some of wins customers, it's just number one thing, they just do not like the stability from other solutions, right? And those they know actually, Zoom always delivers a very stable service with a scalable architecture and so on and so forth. And that also plays a role as well, right? I think everything together, I think stability, modern architecture, pricing, AI, and faster innovation, I think ultimately together, we're winning. So.
Okay, thank you. Our next question comes from Catherine Trebnick with Rosenblatt Securities. Catherine?
I'm always late. Sorry, you guys. Anyway.
Hi, Catherine.
Good to see you both. So my question has to do with contact center. NICE just released their $5 phone. And I was wondering, when you talk about contact center, it's pretty much in this bucket. But what's your pipeline looking for UC and contact center? How is that progressing?
Yeah, Kelly, feel free to chime in. I can comment on their UC offering. So
yeah, why don't you do that first, please?
Yeah, so again, it's hard to comment on our competitors' move, right, into the UC, and the time will tell. In my view, that's absolutely a mistake. Because how could they compete against the others like Zoom and others, right? We had so many years experience with a great scalable architecture. This is hard to believe they are going to win in UC space. And so I could be wrong, but I know I have a high confidence they are not going to win in UC space. So because a lot of the investment in technology, features, integration, and scalability, stability, again, I don't believe that. So.
Yeah, and we see contact center driving, new leads for contact center driving need and desire for Zoom Phone, and we see it come the other way as well. Zoom Phone driving. We talked about this in the prepared remarks about this better together, and that is really inherent with what we're seeing across the platform. And Zoom AI Companion being able to leverage all of that across the entire platform just brings so much power to it that I think you're going to continue to see the ongoing, combination of those two products and the rest of the platform be very strong.
So just in essence, back to the UC piece, there was no disruption whatsoever, even though it was a $5 price.
Even $4. Even for $4, a lot of customers say, "Why want to deploy that? Why do I want to take a risk, deploy something new?" And it's more like today, you already have an iPhone and an Android phone. You want to introduce a new phone. Who's going to deploy that? Who's going to buy that? So that's my opinion.
No, I had to ask the question. Thank you.
Yeah, great question. Thank you.
Thank you, Catherine.
Okay, thank you. Our next question comes from Matthew Van Vliet with BTIG. Matthew?
Hey guys, can you hear me?
Yeah.
Hey, it's Spencer on for Matt. Thank you for taking our question and congrats on the quarter. I apologize if this was already asked, but how are the AI products and the key functionalities driving expansion with existing customers? How much of it is like premium tiers or upselling to premium tiers of the existing footprint versus selling to new phones, contact centers, or just other cross-selling products? Thank you.
I think you look at the existing, you look at installer base, right? For the workplace customers, right? They look at the value. They see they already use Zoom for a long time, like experience. We keep adding more and more value to customers. Guess what? At no additional cost. This essentially, build a long-term trust. They know Zoom they can trust, right? And not like some other vendors, hey, you use our free service. Guess what? After you're stuck with that platform, they are going to increase price with all the features. That's not our philosophy, right? So that's for workplace part. On business services, like take a contact center, for example, right? AI, a companion is a key differentiation because the customer trusts our AI feature set. As I mentioned, right? Every quarter we release some AI features, and to kind of and innovate, right? And I think that part is not free. We are going to charge as well, right? On the one hand, we wanted to add more value to existing customers. On the other hand, we can charge the customer with some features for business services because those features customer really need and also is part of the offering as well.
Thank you, guys.
Thank you.
Thank you.
Our next question comes from Samad Samana with Jefferies. Samad?
Hi, good evening, and thanks for taking my question. So maybe first, just on CCaaS, is there anything you give us in terms of the mix of those 1,100 customers? How many of those are maybe like 100 plus seat deployments versus under that? Just any sense of SMB versus enterprise in the mix there, and kind of related, what's the attach rate of CCaaS into the 100K plus install base that the company has?
Let me think about this. So we've certainly seen, growth in the 100K customers for contact center. We're up to 117 that we disclose. So you can see that they're moving into that realm for sure. And we've been working, in the channel and working with partners to also think about how we help these customers with their digital transformation. In terms of the disbursement across that, the size of our deals is what I would say is they are definitely getting larger. They're getting larger for a couple of reasons, because as we talked about, this added functionality, allowing them to use it externally, as well as we talked about this either last quarter or the quarter before, that with the introduction of the pricing tiers, if you remember, we started with one pricing tier, we eventually added two more, and the AI agent assist, like the Eric was speaking about earlier, is in the highest tier. We actually saw our ASPs for contact center almost double quarter over quarter, because it's such a premium feature. And when I looked at the Q2 deals, the majority of them were purchasing in one of the top two tiers. So all of that is contributing to what I would say is not only expansion in terms of seat count, but expansion in terms of value being derived from the product.
Gotcha. And maybe just on the online retention, it's great to see that improvement there. I'm curious how much of that is due to either the new features that you released versus moving further away from the tightening of the grace period, and it's even better than it was before that slight uptick last quarter, right? So is this like the new durable assumption that we should make? Is that pretty reasonable, or just how are you thinking through that?
Yeah. So, I mean, this is a great question. I get this question all the time, right? Can churn keep getting better? I will tell you that we are modeling it to stay at about 3%. I think that's a really positive rate, but we continue to see improvements on the platform. And I think that's what you're seeing in this quarter, because we did see a little bit of the pull forward, if you will, last quarter for the change in the dunning period, as you mentioned. But this is a clean quarter, right? Meaning that it should really reflect. And if you remember, historically, Q2 is typically a larger seasonally high churn period because of summer holidays. Typically for online, we see higher churn rates in Q2 and in Q4 because of summer and holiday breaks, winter holiday breaks. And we don't put friction in the cancellation cycle because we want customers to use the product as they need. So I think it's very positive to see this record low churn rate in a seasonally high quarter.
Great. Thank you both so much.
Yeah, thank you.
Our next question comes from Matthew Harrigan with Benchmark. Matthew?
Thank you. Are you seeing anything in the broad sweep of AI regulation in the US or Europe that you think can dampen innovation? It sounds like you've modulated some of your data set gathering activity in Europe in response to some political concerns. But what's your view there?
I think when it comes to AI, we are taking a very responsive approach, right? That's the reason why when we launched the AI companion, we already mentioned it. We are not going to use any of our customer data to train our AI models, right? And we take customer data very, very seriously, right? And as a customer, they know that they trust our brand, they trust what we're doing. And so far, I did not see any impact in terms of regulation. And again, this AI is moving rapidly, right? So almost, the email here, and we all look at the potential regulation, but so far impact actually is, to us, to our business, I think is extremely limited. So, like a meeting summary, and it's a very important feature, customer like that. I think we do not use our customer data to train our AI model. And why not keep using that feature? I think there's no impact so far.
Great. Thanks, Eric. I guess one more brilliant presentation to come from you, Kelly. Thank you.
Yeah, thank you, Matthew.
Our next question comes from Patrick Walravens with JMP Securities. Patrick?
Hey, this is Austin Cole on for Pat. Just wanted to touch on international. If I'm not mistaken, Kelly, you mentioned EMEA shrank 1% in constant currency, and those revenues declined last year as well. And if I just look at where we're at this year, looking like maybe on track to shrink again, just wondering if you could talk about what your presence is there and kind of how you're seeing demand in those international regions.
We've certainly seen the economy in EMEA especially continue to be impacted by the ongoing wars that are happening in that continent. And so that in general, I think all of our peers are facing as well. We have been in the process. We have a new leadership team that's coming into place there. So looking forward to that. And we also are really focused on investing in the region. We just last quarter opened up our London Executive Briefing Center, which is amazing. It's a great opportunity to bring customers and partners and prospects all together and really see the entire expanded Zoom 2.0 story in a beautiful place. And it's really leading. I think it's an area that we're really focused on investing and re-accelerating growth.
Great. Thank you.
Yeah.
Okay, thank you so much, everyone. This concludes our Q&A session. I'll now pass it back to Eric for closing comments. Eric?
Yeah, first of all, thank you all for asking about all those great questions. We are very, very grateful. And also thank you for every Zoomie's hard work. And we are going to continue to innovate. And thank you all for your trust. And I'll see you all next quarter. Thank you.
Bye, everybody.
This concludes today's earnings release. We thank you all for your participation. Enjoy the rest of your evening. Thank you.